Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our Sunday free show that we do for the internet, our Broiler Chicken Show. Just want to make sure YouTube is kicking in. Looks like it is, so that's good. So welcome back to the fun. It's about 10:30. Level 1's just finished up class, and I asked whether they would like to do a broiler chickens follow-up. And I do see we have quite a few people here in the Hangout this morning, so it looks like there's a bit of demand. If you guys want me to look at anything in particular, I'll keep the YouTube page open there. So probably maybe you guys that are in the Hangout here, because I don't have the chat window open. If you want me to look at something, just maybe post it on the YouTube page. So please post requests here. There we go. Broiled shrimp, yum. Yeah. So this is our weekend show, and like I said, if there are questions, feel free to post. Level oneers, specifically this time is for follow-up for you guys. I know that you just went through a really heavy lifting episode with fundamental analysis, trying to figure out how do you put fundamental value on assets. So I would imagine there's probably a question or two. I think Peter here actually is a pretty active participant. You're there in the level 1 program, aren't you, Peter? I thought I saw you just join there. Peter, were you our contest winner? I can't remember. I think that was the same Peter. I'm not totally positive. Yeah, so Peter's actually taken advantage of the program and the site resources and stuff. Great to see, That's what in fact, we were sort of talking about this recently. You're only going to get as much out of this site and this education program that you put in. And I do see Peter, he won the contest. We had a raffle recently for a seat, and I see that he's extremely active on the site, which pleases me immensely. Right, so actually somebody's posted a question here in the lounge. What was that question? Said one says in Altcoin FA model there is a rule that says never buy at the margin. Can you please explain the rule? That might, and so excellent, good job. That's exactly the type of questions that I want to address. We had one student on the site, and actually he's been a fairly active participant with different broadcasts. I think we did interviews with him back. We've done a couple interviews with him on YouTube, and also he was part of the Coinigy shows. And I think a fairly active sort of person in the crypto universe. Is this the fundamental model that you're asking about, Juan? Where are you, Juan? Juan. Yeah. So this was actually a model, and this is what I really like to do on the site. Is I like to empower students, and I always say half of my job is I want to make you guys famous. So this was actually Da Vinci's fundamental screening model. Coming out of his level 1 education program, and I think he also posted on his website and stuff like that. On balance, I would agree with the basic principles here. So now, and your question specifically was never buy at the margin. Frankly speaking, I'm not exactly sure what he means by that, but I'm sure, either one of his followers, I think, Colleen, you were a referral of Da Vinci's. Maybe you can ask him to clarify that. I don't know, Juan, if you are a Da Vinci follower. But this happened to be his favorite screening model for crypto. And I mean, what I really liked about what he did here was he created a scoring model to sort of give coins a relative health score. And I do see that this is becoming more and more popular. I noticed that I think it's like 4 or 5 of the major crypto exchanges are coming out with sort of an industry standard sort of screening model for coins, which I think is a good idea. But to answer your question specifically, I can't make comment to never buy at the margin reference. It's interesting. Some of the replies here were, don't market order buy. Maybe that's what he's referring to. But next time I see Dav, and by all means, if all of you guys have contact with him, just reach out to him, and we'll get a straight answer for him for that. But good question. That's exactly what I want to hear from the level oneers. Unfortunately, the answer is I don't know. So we just have to ask him specifically what he's referring to there when he says on the margin. Maybe it's I can't see specifically where the reference is, but that's this. And really, what I would like is, there are like I think there's a few of them actually. I even think we have some in the library. Where there are sites that actually do some. Actually, yeah, it looks like we have quite a few here. So there are sites that do things like create a score system for coins. And I'm sure Bitcoin's going to get a pretty high score, but let's look at Litecoin, for example. So they have like an algo score here, 3.2 out of 5. That's along the same sort of thinking that this kind of thinking. And of course, with the market metrics changing, market went parabolic, years ago, we used to build a screener where we absolutely love coins that were less than $500,000. And now we're actually getting back into the environment where coins are back down less than 100, 200,000. So, I like this as sort of a general sort of roadmap, but use it as like an example. I don't think it's a good idea for anybody on the site to say, okay, well, I'm going to follow this person's model explicitly and make it mine. And really, this is the kind of idea where, when you want to do 20 paper trades, 21/10 account size, really vet this out and see if this fundamental screen appeals to you. So, good stuff, relevant to the topic at hand, and specific reference to buying on the margin. I'm not exactly sure what he's making reference to, but make a note of it, and I'll be sure to ask him next time I see him. All right, so one question down, but unfortunately. Yeah, definitely. Colleen's made reference, and sure have learned that the hard lesson over the past. In fact, it wasn't that on his screen. I thought being listed on multiple exchanges was on his screen. Was it this? Listed on 4 or more exchanges gets a plus mark. Listed on one exchange gets a minus mark. So can you see that, Colleen? So he has included those kind of screens in there. And frankly speaking, that's if you're going to be playing this crypto space on these extremely speculative markets, that's probably one thing you probably ought to do is try and make sure that you have some outs if you think about buying one of these names. Okay, where the heck should we go today? I'm not quite sure. If you do have questions, I do. Somebody just PM'd me a second ago. Feel free to ask. Also on the YouTube page, there's a text box, so I'll try and check in with that. Well, let's see. Do we have a question over here? All right. So, okay. Good job, Tom. Just keep on keeping on. And Julian? Yeah, we gotta learn how to be patient, Julian. Definitely. Okay, so not seeing anything there. And then over on YouTube, Brian, you can check coin Paprika and search a coin, and it will bring a lot of info to check. Thank you, Random. So there's another site. I mean, there's so many that I just happened to have thrown a few of them on the list in our crypto resources section of our library. There's Coin Market Cap, everybody knows that one. ICO Stats, Crypto Social Screener, Mizari, FCAS Tracker. So, we've got a few of them on there. If you're thinking we should add Coin Paprika to our database, thank you for the suggestion. Oh, I see. You are Tomcat. Okay. Cool. This crazy internet and people's secret names and stuff like that. I never know what to call people. All right. So looks like no questions from the lounge here. No questions on the site right at the moment. No questions in YouTube. So that's fine. I suppose we ought to take this is a crypto-related show, so I won't really talk too much stock market here. The only thing I'll say is that I do feel to a certain degree that Bitcoin is, and really also cryptocurrencies, in my eyes, they feel like a risk asset. They're feeling more and more like that these days, so we can see how risk assets in general have been coming down of late, and risk off assets sort of, bury your head in the sand kind of idea. They've been catching a bid over the past week or so. So I will say that with regard to Bitcoin, I'm actually finding to a certain degree that Bitcoin is our orange here. I actually do find it to a certain degree as a leading indicator in this space too. So we'll see if that trend persists. But you can see Bitcoin did break down here well ahead of stocks or oil. I talked at length, through like the free shows and stuff that we do Monday to Friday about how I thought the oil market was being heavily manipulated there. But that's here nor there. So, I'll keep an eye on whether Bitcoin is acting as a leading indicator within the risk-on space. And if that's the case, then, us swimming around these lows here, probably suggesting that stocks and oil need to also come back down, swim against the lows. So we'll see how that goes. Looking at the corn in particular, probably ought to start off just at the higher time frame perspective. I've been talking to you guys at length about this chart for a while, and it's kind of interesting. Somebody who took the recent education programs made a reference to a market state that I definitely was talking about down in here. I definitely felt like the market was chop Vegas kind of area in here, and you didn't really know what to do. But then we broke out and we put in a pretty nice weekly W here. I think it's important to keep in mind that market states will change dramatically over time. And if I do make reference to, this market's just chop Vegas and there's nothing really to do right now, that's definitely sort of very location specific and that sort of time frame specific. But I do remember specifically, we did the shows with Da Vinci back in the late winter there, and he was calling for nice upside objectives, and I was talking AB equals CDs. Then when the weekly W's came in, we started talking a little bit more bullishly, and then we started talking about whether we're going to run into 38.2s. Could we get up to 50% rolls? It turns out ultimately the market did rally all the way up to 61.8, which is actually a fairly, call it crazy, but, especially off of things like 50% rolls, this is actually pretty normal. right? Good old 50% level doink hit, and just about exactly the 50% of the time. So while I did make reference to Chop Vegas down here, by the time we were starting to head into this area here, don't think I was talking so much Chop Vegas as I was talking how high were we going to go. And also, too, I distinctly remember, first off, we had the Litecoin halving event rally, which did produce a heck of a rally. And we were talking basically bullishly into that event. And then also, too, which was kind of interesting, we had our TRI meetup, and we were sort of squawking about bullish setups as we were sort of heading, even in through the TRI meetup. So please understand that, you might watch these videos and hear me make reference to like Chop Vegas in that particular market state, but, a week, a month, 2 months later, things can change dramatically. And that's, sort of one of the reasons why we might have like a higher time frame view, but then we're like, drilling down to the dailies and the 4 hours and all that kind of stuff and hunting setups as we go along here. And as, at higher highs and higher lows defines a bull market, weekly W's, all that kind of stuff. I definitely distinctly remember us talking about, markets moving higher, no doubt about it. I'll definitely say that, the size, the magnitude of this straight move up sort of caught me off guard. But I will say that, 50% rules of big moves like this over 50% time frames, that's actually pretty normal. I do remember that sort of as we were working our way through this summer, we talked about how there was a trading range established. And for quite a while, we were sort of stuck between Mountain Man and 38.2 retracements. And so we actually, and we talked a bit about people hunting long setups off the bottom end of this range. I think this was our TRI meetup rally, and that was a lot of fun watching all the, the students and stuff saying, hey, look at my setup, all that kind of stuff. That rally petered out as we got up into candle wicks. Then we came back down against the bottom end of the range, and basically for about, I would say probably the last couple months, we've just been sort of, the comment has not been Chop Vegas. That was down here. It wasn't Litecoin halving event rallies and typical seasonal bull pushes into the summer. The conversation over the past probably month or so, probably even couple months, has just been sort of, well, we're now established a trading range, and how are we going to resolve out of this? And, for quite a few videos, I was posting a chart that sort of looked like this and just saying, there is a old rule that says that the market should do 50% retracement in about 50% of the time. Same logic as this move going the other direction. And now that's been basically hit and validated. So I guess what I'm thinking here is the message in these videos does change from week to week to week to week. I think the 50% bounce here was actually very technically normal. I think the 50% retracement off of these highs is very normal. As it stands right now, though, and we've sort of talked about this, that we spent a lot of time in this range, and we failed through the bottom end of the range. So, for us to actually call bottoms, notice how long this bottom actually took to develop after failing after a very long consolidation period. So I think the general message right now is the market is heading lower. It's broken down through a well-established range. And now we have to go through the very patient and disciplined process of waiting for the next W to come in. And this might take a long time. I suppose, we did over the past few weeks and maybe month or so talk a little bit about this inside bar failure, and I had put out charts if I was sharp on my game and all that kind of stuff. I'd been short. I didn't take the short. Had a little short setup working off a lower time frame that stopped me out basically at a small profit, but nothing to write home about. Market did dump. Market did confirm this market structure. And really over the past week or so, I've just been conjecturing usually what ends up happening, kind of like what you see with this 50% roll, is the market shoots beyond it and then ends up sort of like oscillating around it, right? And it turns out this thing stalled out up at 61.8. So my sort of thinking of late was that we probably should oscillate around this 8,500. But I noticed in, today's rally peak, you can see there is 85.31. So in essence, it did come back and tag it from the underside. But I even put out sort of tweets to this effect that I'm not overly impressed with the way the market's trying to hold and test. There is that 50% level. This is a stamp 4-hour chart. And you can see how the market was sort of oscillating around this level. Lost it, came back, tried to recapture it, then M'd out again, lost it. And for fun, recently, just been playing around with new setups and just, always student of the market, always learning. There's one setup that we've been sort of throwing around on the site recently that frames its sort of stance based on 4-hour levels in the Forex market, and then you drill down to the lower time frame and just hunt the setups in whatever direction it's going. So I've been sort of playing around with that through the weekend on MEX. This is a daily chart, 4-hour chart, and then a 15-minute chart hunting setups. And as you can see, that daily chart moving average, and this is, one of our level 2 program topics. It could be level 1. It's just we just don't have enough time to get to it. But this is using moving averages, and specifically, this is what I like to, and I think it's basically industry standard, but what I like to call the institutional moving average model, where it's the 9-period and the 18-period exponential moving averages. And in this particular model, we're just simply saying, and to a certain degree, this is very similar to the algo type thinking, where the algo is looking at the 1 hour, 2 hour, and 4 hour. So it's more like swing trading. But in essence, it only prints Uber readings when all of the time frames are all pointing in the same direction. So in essence, this is very similar to that type of thinking, where I'm going to hunt situations where the dailies are pointing in one direction, the 4 hours are pointing in the same direction, and then off the 15-minute chart, I'm just going to hunt every single fractal I can possibly take. And you can see the 4-hour was up, so through this period here, there were no signals. Once the 4-hour turns back down again, then you can see 4 hours and dailies pointing in the same direction. All right, start hunting fractals. So that was as of this event. And I got to say, I'm pretty impressed with this little setup. So it's, basically off the 15-minute, you're just going to basically be hunting any kind of fractals to get short. So here's an empire, here's a railroad tracks. There was a couple little ones. And, just like every trading system, you're never going to find a system that's right 100% of the time. So just off the screen here, right, we got 1, 2, 3, 4, 5, 6, 7, 8 setups, and this one failed. All right, so I mean that's not bad, but there are other periods where I saw like 1 or 2 setups failed. But I think it's just a really good conversation, and I just built this setup over yesterday and today. I was having fun, and 3 reasons. Daily chart pointing down, moving, in this case, institutional moving average bias. 4-hour chart pointing down. 15-minute chart, just hunt short setups. It's a cool little setup, and I mean the results it's spitting out are just beautiful. So, where am I going with all this? What I'm trying to get to is, like we said, off those higher time frame charts, and of course nobody likes this message. I'm not going to win popularity contests on Twitter and in cryptoverse by saying that the trend is down and look for lower prices. That's about the easiest way to lose friends in this space. But a spade is a spade is a spade. And one way you can approach this is, what I like to do is sort of follow what the weekly charts are sort of suggesting. And then, see if you can get alignment, right? Because it's the alignment part that's the tricky part. Where, if the trend is pointing down, you've got multiple time frames all saying one direction, then off of the lowest time frame, and I like 15-minute charts. I used to trade with 15-minute charts or the crude. Any kind of reason to get short, i.e. fractals, to get in there and start shorting. So actually, I was pretty impressed with this. And what's the message right now? Well, as we can see, the daily chart's down. The 4-hour chart was, egregiously down when we just fell out of bed here. And of course, in hindsight, it's 2020. You go back and you look at the trading from that period. And actually, I think I sort of just started it here. And this is what I love about these kind of systems is, as you can see from all these, whoops, that's not what I wanted. As you can see from all these signals, the rule should be that you take the trade, sell half of the position, or maybe even 3/4 of the position. It's really up to you. At something like a 2-to-1. So then that way, even if you get stopped out on the remaining, you've made a little bit of money from your trading. Is your average winner bigger than your average loser? If you just keep banging out these 2-to-1s, then your average trade is going to work out to be bigger than your average loser. It's, that's the way that you make sort of money. And then if you can, put your stop to scratch on the remaining, and sometimes when you get these signals, and it's just hilarious, but sometimes you get these signals where this is a nice inside bar. It's pretty straightforward, not rocket science. There's 2-to-1. Move your stop to scratch on the remaining, and what do you think, guys? Would you be pleased with what happened here? And so if you can get your trading into like this kind of universe, this is where you make just a ridiculous amount of money. But we won't go there today. For the purposes of this, and frankly speaking, if you just want to blow the whole position out at 2-to-1, it's fine by me. I don't care. The key here is we just want to try and make sure that our average winner is bigger than our average loser. And just overnight, right, these are the session breaks. So here's just through today, inside bar fail, boom, hits 2-to-1. Could you still be working part of your short there and have the remaining of your short at stop at scratch? Sure. Yeah, I don't see any reason why not. In comes another inside bar fail. Look at this cute little 2-to-1. Bang, filled. And then the market dumps all the way down into this level. This is why it's a good idea to keep a little bit of the trade on the books, because you just never know what the hell's going to happen. And then there's this one. This is a cute one. So here's a good example where, boom, 2-to-1. And I see this a lot, especially on sites like MEX. Do you think it's an accident? There's beautifully defined little double top failure here. The market dumps down into 2-to-1 and then just stops. Why? Because all of the clowns that follow 2-to-1 risk reward, they all had their buy orders down here. So you see the market just goes a little bit further and then just takes off the other direction. It's quite remarkable how this stuff works. You often see that these 2-to-1 trades, like look at this. Look at the symmetry on this. Market comes right down into that level and then stops. Why? Well, the only answer you can give is because that was basically where all, against lows, all that kind of talk. But I get a feeling a lot of 2-to-1 guys said, all right, that's it. I'm filled. Get me out of there. Anyway, so the point here is, where am I going with all this? Like I said, weekly charts pointing down. Daily charts, trend is down. 4-hour charts, trend is down. So I still have to be thinking, as of this point right here, I have to be thinking I can only hunt short setups. And so that's basically what this model is. And as you can see, we did have a nice little dead cat bounce through the, well, yeah, I guess you could say it's through the New York kill zone. A little bit of a pivot. Market rallied up, probably washed out a lot of weekend stops there, and then promptly put in another inside bar. Gee whiz, what a coincidence. A general rule I like to follow with this, what I've noticed is that what I really want to do, and I'll ask my team again, and lots of people send me cool stuff, but man, for some reason I just can't get my head wrapped around this. But what I want to do is I want to make sure that every single trade taken, and we'll use MEX here today, but every single trade taken, the risk is I want to risk $50 to make $100. So how do I do that? How do I figure out, in this particular case, you can see the formation's 49. So this is probably like a 1-to-1. But notice like this formation is 33.5. How do I figure out how many contracts and what leverage I have to use on MEX so that when I take this trade, I'm risking $50 and I want to make $100? I don't know how the hell to do this. It drives me crazy in crypto to try and figure this out. Of course, in the classic commodities markets, it's a little bit easier. But anyway, the point that I'm making here is I think that an intraday setup did come in here. And I'm going to be following this because I did see there was quite a few people on the site that have been asking about whether we're going to be doing any day trading or any, sort of, day/swing trading. And I'll just keep this model up and running for site people just so you can sort of see from a day trader's perspective what sort of stance I would have right now. But anyway, through a simple question out there, feel free to comment. If you want to PM me on the site. People have tried to help me with this before, but I just can't seem to wrap my head around it. But long and short of it here is from a day trader's perspective, I'd be short from that 85.35 with my stop just above 85.85, or basically $50 risk. And I'd be looking for a nice tag, test of these lows for that initial profit objective. So, 2/3. You want to go half, that's fine. Whatever. Just make darn sure. I think it's a good idea to sell at least half. But, if you want to, pad the account, I might, suggest bumping that up to like 3/4. And then every once in a while, the market will just shit the bed like these kind of trades, and you're thankful you still have a little bit of the position on as the market just keeps rocking. So, hopefully that gives you... that's a good point, Ruff. And so that's why I like the $50. So if I can do $50 and then this is $35, but that's a good point, like how much is MEX going to grind you on commissions? And then also too, what I have to also monitor, and I'll be sort of tracking this because I just built this weekend and I'll now forward test it for the next couple months. I want to see what the slippage on the stops look like. Where would you have actually gotten filled on this stop out here if that one was hit? It turns out the 2-to-1 was hit. This one here. So this one here, it fired, got stopped out. What was the slippage on that stop? I don't know. But anyway, kind of a fun example and sort of what I'm thinking right now, for the public audience, for whatever it's worth, off a sort of day trading perspective. I like short that inside bar with a price objective down here around 79.20. This is also an interesting conversation too about do you want to micromanage positions? So in this particular case, 50% of that move is this 79.83. It's interesting how the market came right down to that level. You can see it's trying to turn here. I don't think I have a 50% of this anticipated range traded to just yet. So I wouldn't really be thinking this just yet. But if we did dump through these lows, hit that 50% level, I like the idea that we don't really ever want to see a winning trade turn into a losing trade. So if we did hit that level, I wouldn't have a problem if you moved your stop to scratch right there, just in case it ratchets back up and then starts to move against you. Psychologically, that's pretty tough. So I do have the 50% little rule on here, so we'll see how that goes as well, just in case you're curious what's going on there. So there you go. Had a nice little sell signal on the 15 minutes based on the higher time frame bias. And as you can see, that position's working away, just doing its thing. And probably more importantly, too, you notice that there are no long references here at all. So I cannot even think about taking a long here as long as these guys are pointed in the same direction. In essence, I have to look at counter trend rallies as nothing more than new shorting windows. Now, if we get a counter trend rally that stops these kind of things out, it might turn the moving averages back bullish, and then if they're giving contrarian signals, then it's just a big hurry up and do nothing, which was sort of like this window here, right? 4 hours turned up on this stop out. We had to wait until the 4 hours turned back down to go back on the short side. Okay, so hopefully that gives you sort of weekly higher time frame perspective. And it gives you also a lower time. And actually sort of the in-between of that would probably be algo kind of thinking. And I did notice, like for the swing traders out there, if we do bot setups, and I just did this one off of this current rally because the counter trend rally, if I go off of these previous highs, we never did get back to 33. So that's why I've used this high here. When I replicate this range, A, B, C, D, that takes us down to this 6,100. Who knows what's going to happen here? I don't know. Maybe it gets hit. Maybe it doesn't. But I did notice one high, two highs, three highs, four highs, five highs. Gee whiz, there's a heck of a lot of highs to work with there. So I actually think from a swing trader's perspective that these kind of bot setups are actually working right now. And then also too, from an algo perspective, the double top did turn, as we sort of showed you off those moving averages. This algo is built off of my Delacour index, which is, like an amalgamation of like 40 or 50 different indicators. It's basically the same premise that when the higher time frame, when all time frames used, and this happens to use 1 hour, 2 hour, and 4 hour, when they're all pointing the same direction and the signals come in line, then the algo goes uber and it's telling you that the market's trying to trend. So the question I have for here is, did this little move right here, because keep in mind this low here is 80.2914. This low here was 79.86. So that did happen. That bearish structure signal did happen while the algo was bear. So as you can see, I do have the algo trade metric on here, and I'll just see how it goes. Let's see what happens. Because I think that the algo fired a sell signal here. And then, it's interesting how algo's fallen out of Uber here. Some of the other indexes perked up into Uber short there on that move. And you can see Altcoin is still sitting Uber bear here. Obviously with the CME closed, they're not part of the conversation right now. So this would be really interesting. So, I guess the point that I'm trying to make here, of course, weeklies, we're oscillating at that 50% level, but I'm seeing a lot of sort of resistance building up at that 50% level, and it looks like that's turning into resistance rather than support now. The lower time frames, swing traders are getting bought, setups, algos are starting to fire. And then lastly, like I said, which is kind of a fun experiment, which I'll just sort of be trying to add to the conversation, the day traders got off a signal to go short about, what is that? That came in at 8:45 a.m. my time. So that's about 2 hours ago, two and a half hours ago. And you can see we're just flirting with these key lows right now. My hunch is, for whatever it's worth, this candle made a new high, so 80.29, 80.28. Yeah, so interestingly enough, the newest fractal signal will actually fire on a loss of this low here. Now that would probably be too big for me to consider for a day trade, because like I said, I don't want to risk more than $50. Oh, 39. Okay, well, that's doable. I don't really like taking trade signals at the end of these big fractals like this, though. So I think on balance, I would be like, oh, God, do I have to take this trade? Oh, okay, fine. But you can clearly see if we lose this low here, not only is there going to be a bearish AB equals CD that fires here, looks like it might happen just as we're talking here. So this low here is 80.12, 80.01. Look at that. Is that right? No, that's the high. Sorry, I totally misread that. 79.86, and we're right now 79.87 within $1. But I could very easily see that if this thing does fire here, probably gonna do something like AB. And clone that. CD. And gee whiz, what a coincidence. That takes us right into our 2-to-1 objective. It's so funny watching this stuff after a while. It's so cliche. Oh, goodness. So this will be interesting. And, on the fail of this level, we might actually see some fireworks here. So let's keep your eyes peeled. What did we say that was? That was 86, and the low is 87. So maybe we'll go off and look at something else, and we'll set an alert to this. And if it goes crazy, then we'll know that the AB. Oh, there we go. Looks like it's happening as 87. What are you gonna do? Are you gonna break? You son of a. Oh no, not this time. Anyway, we'll put an alert on it, and of course, if it fires, whoops. Oh, there you go. That was quick. Is somebody watching this video? I swear that's funny. All right, so now we have a bear AB equals CD that's now validated. So my hunch is this probably got a pretty good shot of hitting our objective. We'll see what happens. Only time will tell. All right, so that's sort of what I see happening with Bitcoin right now. The altcoins, I think I had talked to you about this before. We had W's on things like Litecoin and things like Ethereum working, and Litecoin one, you can see it just got bitch slapped, get the fuck out of there. And you can see, there's nothing to write home about here. This looks pretty weak right now. The Ethereum one, at least it had a big enough of a push that it got to that bot trade management rule, the 50% of your anticipated move, so you can move your stop to scratch at least. And I think that's basically the case here. The Ethereum trade fell apart. Somebody came out and just said, get me the hell out of here on both of these events, right? Both Litecoin and Ethereum, big red candles. Not so much there on Litecoin, but big red candle there on Ethereum. So, I've just been sort of like, there just isn't anything to do here right now. I've talked to, on the free videos, I've talked at length about I have 3 different more senior, they're still very speculative, but more senior crypto related names in the stock market. that I'm following. I would like to be shareholders of these companies. The Hut 8, these guys really seem to have a pretty good reputation. I don't know whether that's the right word, but general sentiment. They did actually recently move from the Venture Exchange to the Big Board Toronto Stock Exchange. They are a Canadian company. Interestingly enough, the guy who runs the company is Dutch. So our CTO, Sjoerd, is Dutch. He comes from the center of the universe, Breda, Netherlands. So as a result, he has a bit of an affinity with this gentleman who runs this company. As you can see from the screen, we just made a new M, so that doesn't really help. Maybe we can start Wing out here, and you can see the prospective bot levels that I have on this. But this trade's going to take a lot of time to develop here, I think. It's trying, but we'll see how it goes. There's good old Novogratz. He's seems to have been on kind of the outs lately in the sort of crypto verse. Don't hear too many people talking about him anymore. His stock just made another new low here, so certainly nothing to get excited about here yet. And we have gone beyond 66, so things like trend continuation trades, they're off the table for me. I just don't have anything to work there. And then finally, I'm interested in this Riot just because it's right down at the bottom end of the range. We'll say, looking at momentum, doesn't look good here. We did, first and foremost, I did take a shot with this sort of, same sort of thing of ETH and Litecoin and stuff. I did take a shot off of this double bottom. Market trade was treating us pretty well, and then all of a sudden the market just said, fuck you, get the hell out. So we liquidated the position on the day. In fact, I had to do it right through a class. It was brutal. Alarms go, I'm like teaching a class, instructor. Alarms start going off. Oh, Jesus. And so I actually had to go through the process of liquidating the position through the class. That was kind of awkward. But nonetheless, if anything, if I'm a demonstrator of best practices and I followed my plan, then I got to be proud of myself. But as you can see, this thing's worked its way, made new lows here over the past few days. So there's just nothing for me to work with here either. And I just have to be patient and disciplined and wait. So, looking at Bitcoin, looks like it's looking a little heavy here. Litecoin and Ethereum, nothing. Things like crypto-related stocks, got nothing. So it's awfully tough for me to make the bullish case here. I'll say that. I suppose we could take a quick boo at some of the altcoins. I did notice if you are an altcoin trader, if you want to call yourself that, I do see situations like this Geo where if you can snipe, right? Razel says Novogratz was on the news lately for using Backed. Okay, cool. Thank you, Razel. So appreciate that. I haven't heard too much publicly from him lately, but thank you, Razel. But, just sort of finishing off the thought here. I see this a lot sort of in the market right now. You get these, hopefully everybody can see, probably nobody was interested in this thing down here at all. I suppose you could make the argument, probably easier to see, yeah. Not the prettiest of bottoms. I'm not going to sugarcoat it. Very difficult. If this was in your wheelhouse, then I suppose, you were watching it pretty closely. I might make an argument that you could have snuck in. This is this trend line just off of these peaks. I don't know whether that's even the highest high. Tough to say. If you were like quick on the trigger, I'm not going to say this is easy. Don't get me wrong. But if you were watching names like this and you see this double bottom coming in, you see the W's and you want to take these like momentum trades, I think there's money to be made here in this market, but this is tough trading. I'm not going to sugarcoat it. This is very tough. And you have to make damn sure that the moment you place your buy order and you get filled, maybe you like hunted this fractal down here or something, you better make damn sure to have your sell order working at exactly the same time. This way at least you would have gotten nice fills up in here. And notice, kind of like what I was just talking about Bitcoin, notice, oh boy, instantly inside bar failure. So now all these people that bought up here, they're all trapped, and now basically the market makers are just going to drive them crazy with a pullback all the way down to those lows. So that's sort of the type of altcoin market I see right now. There are opportunities. You got to be slick. You got to have your plan all laid and welled out. You got to have like your fundamental list all ready to go. And when these things W, you got to take the trade. And if they don't W, you just got to do nothing. Certainly not going to say it's easy. And if anything, what I really like, and here's a good example of a trade setup that just fired, that's just working away. I think it's a good idea to look at your assets versus things like USD. I really think that's a good idea. Here we can all see the W that came in, and maybe your price objective is 50% rolls. You can see the rally. You can see the subsequent pullback. If anything, this is why we like to call this level here the noob stop. Because quite often what the market will do is it'll come down and it'll just brush up against all these lows. And that's exactly what that was. And then turn right back up, and it just pisses you off. I think it's a good idea. I'm frank. I don't know the fundamentals of this story, so I can't comment there. But if you did see this W and you did see this breakout, try not to chase. Identify reload zones, and in this particular case, even if you'd said, look, and I'm going to try and get in off of this original bottom, you want to wait for the market to dump into here, and you can see a nice pretty little inside bar that fires. It sort of tells you maybe the selling is done for now, and the trade's just working away. So I don't think all cryptocurrencies are susceptible, ironically enough, to how much price risk that something like Bitcoin has right now. There are some names out there that actually have bottoms. Like, look at this one, this BitTube. We talked recently about this. Here's a good example, almost the same thing. Draw your reload zones. In this case, there's a big old juicy gap sitting there you could have just thrown your bid against. You want to let the market come in and give you some sort of signs of a bottom at this level. Maybe you left this trade alone because it was just too volatile. Then the market comes in. We often say that, especially with candle gaps, and the level twos, they just did this, their gap theory. We don't really consider this gap filled in until a candle body actually comes down and fills this in. So you could actually argue that that was what this event was right here. And, markets are markets are markets. I mean, you can see the W, you can see the reload zones, you can see the gaps, and the chart speaks for itself. So this trade is just working. It has not failed. It has not broken down. And again, I think it's a good idea to look at your asset versus USD. Because this might be a situation where we actually have, the dominance actually maybe correct a little bit. Imagine that, eh? I can't comment on things like Ethereum, but, you see, names like that, BitTube and stuff. And, Shane just joined the call. Shane's all bullish of Doge down here. My setup from the spring failed. And you can see they just failed it, bastards. And then they go and put in a bottom. Sons of bitches. And same sort of thing as this BitTorrent. Same idea. We failed, dumped. Now looks like it's going to try and put in a bottom. And I wanted to keep these charts on the screen just to show you guys that, yeah, maybe my first attempt at a trade failed, but that doesn't mean you should lose focus. Maybe the second one works. So I think we can actually start drawing. It'll drive you crazy. But I think you can actually start drawing trade setups off of Doge. Something like that. Where's it 2-1? Oh, geez, even that's 3-1, eh? If we shoot for like, this would be like a Shane trade. If we shoot for 50% roll, that's only a nice 6-1 risk reward. What the hell? We live in Doge land. We don't take your goddamn 2-1s. We only want 6-1s. Who knows? But let's keep this on here. Let's see what happens. Only time will tell. So anyway, the point I would just simply make is that not every single cryptocurrency, in my opinion, is cut from the same jib right now. I think there are actually a whole bunch of different really interesting stories. And, you know, if I'm a risk taker and I look at something like this, is it worth coming in and taking a nibble off of this? 1% of your portfolio? Maybe, you know, you don't have to go and, you know, you could be a little old lady and you don't have to go and throw all 5% of your portfolio at a name on any one go. I don't know if you like this story. Isn't it a terrible place to nibble? I mean, I suppose I could argue it could have taken a nibble off of like reload zone tests here and I'd still be long. And, you know, for the traders out there, I actually think there's not a bad trade to be buying down in this area and just risking down into this area. And, you know, this would probably be like Joe's six-pack kind of trade, right? So take, you know, 5% of your portfolio, and you're not allowed to risk more than 50% of that. So anyway, there is altcoin land. Altcoin land actually looks very different than the bigger coins right now. There are some names that are just sort of bumping along these bottoms and just doing their thing. So never a dull moment in this space, I suppose. All right. I don't know if there's anything else to talk to you guys about today. Hey, look at that. Hey, we're coming along nicely here. Might even get a fill here before we're finished the video. Yeah, well, and it's interesting how Heinz, you know, excellent comment there. You know, a lot of these kind of conversations are about delisting events, and I think to a certain degree you could make the argument that if this thing actually W's out here, can recapture this high, then my hunch is whatever the sort of negativity about that delisting event has played itself out. So you want to wait for that W to come in? Totally fine by me. As I'd sort of said, this trade idea failed for me. I'm just watching it. We'll just see if this can actually put in another bottom. Or it might just go right off the board. Definitely possible in this space, no doubt about it. All right. So, well, that was about an hour. I didn't really see anybody ask any questions. Can you talk a little bit about the Forex markets charts? Love level 1 so far. Grim is awesome. Hey, awesome. Nice. Doot, what are you specifically asking about with regard to Forex? What's on your mind? Obviously, Forex is a big topic, so you must have a little bit more specific of a question. We're all waiting on you, Doot. I do understand that the YouTube age is a few seconds delayed, so while we wait for Doot to articulate his Forex question, let's see whether my 2-to-1 level gets hit on Bitcoin! I gotta tell you, this is a lot of fun to watch. It's pretty cool. Damn impressed. Anyway, no, okay, Doot. I gave you an opportunity here. All right, any questions in the? Okay, let's see what it says. Sorry, was timed out. Haha. Maybe a general overview of what's going on with the major pairs. Well, you know, first and foremost, you know, and if you haven't heard this rant before, you probably should hear it now. The Forex market itself was never designed for the public. It was supposed to be a network that the banks actually all use privately. So, and I think it's important that we articulate that, because in a weird sort of way, the Forex market and the CFD market and cryptocurrencies are all very similar in that these are all totally unregulated markets. Now, I mean, let's call a spade here. If a market is unregulated, do you think that the people that control the market are going to work in your best interest? Do you think they're going to be friendly? Do you think they're going to give you good fills? Do you think they're going to honor fills? Are you absolutely certain that your Forex firm is even liquid, and will it survive? And I guess the reason why I point this all out is I have seen, very much like crypto, but probably even worse, Forex trading is dangerous, to say the least. As a prop trader, and as a prop trader, I mean, you're dealing with tens of thousands, in some cases hundreds of thousands of dollars. You can't take the chance of some market maker not honoring your fill, or stopping you out even though price never traded at that level. I think that's extremely dangerous. So as a result, not really the biggest fan of trading Forex. What I would suggest is people should be trading the futures markets, because at least that way the futures markets are technically they have what's called a clearing corporation, and the clearing corporation guarantees fills. So if you can show your broker that the price traded either one tick higher or one tick lower than your order level, depending on whether you're buying or selling, then you're absolutely guaranteed a fill. And you can actually go to the exchange and say, hey, this broker's not honoring me. There's the print showing the price either one tick higher or lower than my order level, which means I should have gotten fill. And the exchange will force the broker to fill you. You're not going to find that in Forex. That's absolutely damn certain. So, as I said, I'm not really the biggest fan of trading Forex. The one sort of benefit of trading Forex is that there's no sort of minimum contract size. So you can put on very, very, very small trades. So from that perspective, and if you can work with higher time frame charts, and you're trading things like M's and W's, and so your stop is on the other side of really important key levels, then I think you can do Forex. But to be honest with you, my gut feeling is Forex was never designed for the public. They let the public in because the public was saying, this is controlled, it's unfair market advantage. And I think the Forex people said, fucking hey, man, let the public come in and we'll just steal their money because it's unregulated. So trade the Forex markets with that understanding. Now, with regard to currencies, as you see on here, I have all the futures contracts of the major currency pairs. This is the way that I would approach the market. We always sort of start off our analysis on currencies with just a quick boo at the US dollar index. And I think it's important to note here for the US dollar that we're actually coming into important levels. So if we just drew a fib from the old highs, there to there and there to there. So hopefully everybody can see reload zones. Should be pretty straightforward. Also notice too, with this range extension breakout, I'll make the reload zone red. We can draw a parking garage up in this area. So we've got a pretty good level, and I love it when things like reload zones line up with parking garages or reload zones within reload zones. You get this overlapping zone, which to me is super, super powerful, right? This little sort of zone right in here. Right in here. So it's right by 78.6 and 1.618 right in there. And then notice, gee whiz, what a coincidence. There's a price gap just sitting right on the charts. Right there. So now we're starting to get a pretty darn good level right here. But also notice too, there's also a cheeky little price gap right up here as well. There. So, looking at this chart, first and foremost, this is a weekly chart. We just forged to a new weekly high. So, should we be thinking bearish anyway in the face of that? No. Show me a new high and I'll show you a buy, all that kind of talk. But we are starting to get into areas where, don't be surprised. Number one, we should start seeing, intensified price volatility. As sort of bigger time frame participants start coming in and looking to short against this original market structure top, right? We could even make the argument like on a clothesline basis. Notice that clothesline, there's probably a lot of institutional players that said, look, I can't short down here. I want it, like if we change this to a line chart, I want to be short off of the original M top. That's where I want to be short. So market dumps, and remember, institutions can't sell down markets, they sell up markets. They engineer a big bull rally. And as we come into these levels, the bigger boys are like, okay, well, this is where I wanted to be short off all these levels. Now I'm going to start getting active. And the thing is they trade in size. So, when we're throwing around billions of dollars, maybe even hundreds of billions of dollars, that means that they actually have to create liquidity pools to actually get filled in that size. So, it wouldn't surprise me to actually hear lots of talk over the next, weeks, months about panic in the market and the public panicking into things like the US dollar. And, maybe stock markets roll over hard here seasonally, inject some serious volatility into this thing so that the institutional players can get filled in their size. And I wouldn't be surprised, too, if we actually do things like come in, paint an M, and then blast through the top of the M, and it turns out that it's actually a head and shoulders, and down we go, where they paint like false tops here to get that liquidity that they want. So that's sort of what I'm thinking, big US dollar index. So, I would start off your sort of analysis thinking along those lines. Always start with sort of what is the US dollar doing. And, with that sort of backdrop, if we zoom over to things like the euro, do we see sort of the exact opposite? And the answer I think here is actually we do. So we go boobity-boo. Notice reload zones. Notice cheeky price gaps. Look at that big old hole in the charts. So I think you can make the argument that the US dollar looks like it wants to rally into resistance and the euro wants to fall into support. There's a reload zone, line in the sand, big old price gap. So hopefully you can see the similarities. Because keep in mind, 35% of the US dollar index is this creature, right? So obviously as this thing moves, it's going to affect the US dollar index. So I can't really think about euro longs here until these problems are dealt with. As soon as these problems are dealt with, reload zone, big old hole, you can hopefully see where the original double bottom is down here, right? There's the W. So, if I was, this is sort of like the Bitcoin conversation. So, if I did sort of what's the daily trend, what's the weekly trend, what's the 4-hour trend, my hunch is I'd probably be hunting shorts on this. And any of these sort of counter trend rallies off the 15-minute chart, I'd be looking to short. And really the ultimate objective, kind of like, I showed you on Bitcoin, the ultimate objective, whoa, there we go. All right, so somebody just mentioned that Bitcoin price dumped. So there's 2 to 1. Out goes half of the position, 2/3, 3/4, whatever. And now you're sitting on a free position, stop at scratch, and you're just laughing, right? Isn't that cool how that works? You guys over on YouTube, aren't you? I'd be impressed if I watched a guy do this right in real time. I mean, I think when we started this video, we were like right up here. That's cool. Anyway, on the remaining position now, I would be trailing stops. And actually one way that I've been sort of experimenting right now is just to simply use a close above a fast moving average. So on the chart here, I happen to have on the 13 period exponential moving average, and I would use this as stop. So you can sort of see here, 2 to 1's hit, out goes half of the position, and then if the market can close above that 13 EMA, you just walk away from the rest. And in this particular case, you would have got stopped out at scratch on the remaining. So in this case, 2 to 1's been hit, half of the position taken off the table, other half you're just riding it now. You're just laughing. And you can see where the 13 EMA is. My hunch is it'll probably do something like this, where you see, massive dump, price moves away from the 13 EMA, price comes down, it consolidates a bit, and then you get stopped out on the remaining if it can close back above. And this is interesting because notice that in essence, you get stopped out and there's that market structure, and then within an hour, a new sell signal comes in basically at that same level. And I see that happen a lot in the market. So in this case, sell part of the position at 2 to 1, stop to trailing, you want to use 13 EMA, you do absolutely nothing through all this, absolutely nothing, and then boom, you're stopped out on the remaining of whatever that trade was. So that's probably how I would look at price action right now, is we just got to let the 13 EMA work its way along here. And my hunch is that, you can see big dump, then consolidation, big dump, then consolidation. My hunch is big dump, and now we consolidate a bit here. But that's cool. Somebody should make reference to that, because I literally walked that trade right through that fucking thing from start to finish. And I was posting in the site, I don't know what's going to happen. Let's see. But, this is what the rule says. So away you go. That's so cool. And then I suppose, if we want to get really slick about this, we'd go AB all the way down there, eh? CD. So it actually looks like we probably want to go a little bit further here. So we'll see how that goes. Anyway, I'll update everybody on the site as that develops. So anyway, we'll just we'll let that simmer, because it looks like that was a pretty good idea. Okay, so like I just said, off of the euro, same sort of thinking. Where's that chart? If I, weekly, clearly we must be down. Yeah, I mean, down with a vengeance. Daily, still down. 4 hour. Interesting. Okay, so daily, you saw that we've been down daily since July 19th, so a long time. But off the 4 hour, you can see, so the dailies, they were short as of, what did we say, 14th? Somewhere in this area here, right? So probably on this failure here, we'll just sort of make a note there. So, looking at the euro right now, dailies, we've gone down here. So, on the 4 hour fail here, this counter trend rally, off of like lower time frame hunt shorts, and that makes sense too because you're shorting against these highs. Market works lower, 15 minutes, you probably got another short there. A little bit of a back and forth here. You can see we went bull, so off of the trading algo, we'd be sort of back on the sidelines. Went bear there, so that might have happened. I don't know whether that would have produced a trade. Yeah, it looks like that dump happened there. Maybe you'd be hunting like 15-minute setups here. Who knows? Really good. Because the higher time frame's bear, when this goes bull, we do nothing. Then notice we go bear here. Bear, nothing. You can hunt shorts, but I don't know whether anything came in. Then bear fires here, and so now any of these kind of 15-minute counter trend rallies probably set up shorts. You're shorting, hunting shorts off 15 minutes. Then jump back up, you're doing nothing. Then you're back on bear, 15-minute charts, you're hunting. Like that probably set up a really good short, kind of thinking. So the point where I'm trying to make is that on this failure, notice we went bull here, so you're doing nothing here. On this failure here, now you're back to bear, so like this kind of counter trend rally, 15-minute short, this kind of counter trend rally, 15-minute short, this one, etc. But notice on the 4-hour, we've actually turned back bull. So for the time being, actually, I would say absolutely nothing. There's nothing to do here. That's encouraging. Maybe it's the fact that the market's trying to find a base here. I don't know. But I couldn't go back into hunting short mode until this rolls over. So, I don't know. We talked U.S. dollar index. We talked about Bitcoin or Euro. Can we leave the Forex talk at that for now? Did you want me to do anything else? Doot. I've been talking for about an hour and a half here, so I think we probably should wrap it up at that for today. Hope you guys enjoyed that. Really interesting conversation. I'm glad I was able to share this setup publicly today. It's such a cool setup, I gotta tell you. This is totally awesome. So, have yourselves a great day. I'm going to go out and have a fun afternoon with the boy. And the good part about being with Liam is he doesn't care about the market. He just doesn't care. So it's a total, just hit the reset button. If you want to watch this develop in real time, of course, our site membership, pretty cheap, only like $30-40 a month or something like that. I update people regularly on all these different setups that I follow. So as you can see, we've got swing short setups working. Now we can make the argument we got swing day trader setups working. And we just have fun on the site, just doing what we do. Hope you enjoyed that. Don't be a stranger. Feel free to leave a comment. Hit that like button, subscribe button, smash that chicken, something like that. Have yourselves a great day. All the best. The only thing left for Brian to say is bye for now. I wasn't going to touch that one, Colleen? All right, take it easy, everybody. Bye now.